What's up, everybody? Welcome back to another lesson of the High Performance Trader. I'm Joshua Salvetti. Today, I want to break down a quick lesson. I call it the 50-50 perspective, right? But this only works if you have the proper knowledge of critical levels, right? What are critical levels? They're pint numbers. What are pint numbers? They are the previous day open, low, close, and high. These are critical levels. These levels literally guide me each and every single day. And today I want to do a quick breakdown on how they helped me get in and out of the market today and avoid some bad trades, right? So before we go any further, guys, you already know if you want to get involved with my team, click the links below. Right, spots are limited on the Discord. I like to keep it that way to maintain quality, but we are accepting new traders at this moment, okay? So guys, go on my website, apply, do whatever you got to do, right? But get involved with a fire team, right? So today I'm going to be breaking down real quick 8/12/2024, right? And I just kind of want to break down how I approach the market each and every single day, right? So first things first, I'm going to whip out the Discord, right? And I'm going to show you our pre-market plan. Right, so over here in our pre-market plan, you're going to see I keep this extremely simple each and every single day, but effective, and that's important, right? It's very important for it to be simple, but it's got to be effective, right? And over here, SPY, pre-market analysis, 56394 is a very important level, right? So I'm looking for buyers to show strength this morning off open print, PDH, and EOD, right? These levels are all very close together today. So this morning I'm looking to play off whoever controls them. First upside target is 536. If buyers can muscle through 536, right, I will become very bullish, and I'm looking for 539, right? Bearish scenario. I'm watching for sellers to show strength this morning off OP, EOD, PDH. Any selling structure at this level, I'm looking to target 522. And now check out this little zone I have right here. This little zone right here around 531. Notice how it's lining up with the 50 EMA. This is very important, right? So now, same exact chart, right? So you're going to notice here, right? I got my critical levels. I got previous day high. I got EOD. I got PDL. Now, the way I'm looking to trade this, right, is whoever can control PDH, EOD, right? This is what I call the sweet spot, right? Whoever can control this with open print right there in the middle, I'm then going to make my decision. I'm then going to trade with them, right? Now, at the same time, I have to keep my eye on this 531 area, right? This is a very simple break and retest. Well, Josh, where'd you get that level? This is the beautiful part. It's literally a previous day high from last week. That's it. Nothing super hard here, right? I just constantly watch the pint numbers. Not just yesterday's, but it could be last week. It could be last month. It doesn't matter, but I always keep my eye on market structure on larger time frames, guys, and that's the key. That's what helps me. That's what simplifies this process. See, if I don't do that, right, and I used to not, I would have all these different lines on my chart, all these different zones. I'd be constantly looking to see who was controlling them, right? And the next thing you know, you're in analysis paralysis because you can't focus. You can't think. You have too many lines on your chart, right? So, guys, you already know I recommend this to everybody out there in YouTube and on my team. Focus on the pint numbers. It simplifies the process, right? So, today ended up being massive chop, right? And I kind of want to break down, though, how open print and end of day played a massive role, right? So we get some selling here in the morning. We come right down into our level, right? And then notice how buyers step up at this level, right? Notice how they rip through end of day. They rip above the 50 EMA, and right here, they actually close above it. This is a very bullish indicator for me. So once again, you guys know I use critical level, right? I use moving averages, and I use market structure, right? So right here, closing above the 50, clouds turning green. We're coming into open print, right? Open print, we get some acceptance, and then a nice move here off open print into previous day high and above, right? I did not capture any of this move, but multiple traders on my team did. They know the process, they know the principles, right? And they stick to it, right? So that was a beautiful trade. Now, right, I'm staying patient. I'm not in anything. And then we get this massive red candle, right? Now, the old Josh would have seen this, right? This massive red candle and been like, oh, dude, look, they've dropped below end of day. We're coming up for a retest. I have to short this into the lows. That was the old Josh. And what used to happen is I would turn into liquidity for the smart traders, the patient traders, right? The disciplined traders, the process-oriented traders, right? I'm going to explain to you guys how we caught this move into the highs, right? So check out the moving averages. Check out the EMA cloud, right? Check out the 50. Check out the 9D EMA. That's that blue line right there, right? So I don't have time to dive into it today, but I've learned to study what a healthy relationship looks like and an unhealthy relationship looks like between the moving averages and price. And all what that is how extended are the moving averages, right? So you're going to see over here, look at this sell-off, right? Look how nice price and the 9 are. They're hugging. They're not extended, right? The 9 is hugging price on the way down, and price is hugging the 9, right? Every time we get extended, right? Like right here, we get a little pullback back into the 9. Selling comes back. This is what I call a healthy trend. This is also a healthy trend. Guys, this is not a healthy trend. This is what I call a violent sell-off that leads to the snapback. What's the snapback? The reversal, right? So anytime you get this super violent sell-off or rise in price, don't chase. Instead of chasing, look to see how extended you are from the 9. Notice how extended we are here. We're super extended from the 50. We're super extended from the 9D EMA, the EMA clouds. So instead of going short, I'm going, okay, what's it look like if buyers muscle through this, right? And now this is where I'm going to whip out the 2-minute. Right now, guys, this fits all my criteria. Why? You got EOD. That's the critical level, right? I'm using my moving averages, right? And I'm using market structure, right? You get a nice break and retest here off end of day. Now, if sellers defend this, we're going to wipe out the previous candle, and then that would be a good short play. But what does it look like if they don't? Price pops above end of day. All these people that went short and chased the trade are starting to stop out of their positions. So this was now our long entry. This was the candle that invalidated this bearish chart pattern, guys. And this is literally how I like to trade each and every single day. You have to remain present, you have to remain grounded, and you have to remain disciplined, right? So we entered the market long here, targeting PDH and targeting high of day, and we got a nice move up here into pre-market high. So guys, this is what I call the 50-50 perspective, right? Look for certain chart patterns to be invalidated and capitalize on them. I hope you guys like this lesson. Make sure you hit a like, subscribe for more content, join the team, and until next time, stay blessed. I'm Joshua Salvetti. I'm out.